Good afternoon, everyone, and welcome to this webinar. And glad to see you guys who are very curious to know about the markets and just to unfold what really is happening in the markets. So, I would be walking you through what Nifty has been doing in the past 2 years post COVID on the long term basis, and how, on an intermediate basis, for the past few months, we have seen Nifty correcting what's really happening, and then break it down to more shorter term time frame as well as intraday, that what it's really doing, since we've already crossed half day of the market. So what else can be done? And the same thing we would cover in the bank nifty as well. So before even starting off, I would like to definitely thank ET Markets for such a good platform where it would be easier to communicate and interact with viewers, and it will be very helpful for them to understand that what exactly markets are doing currently, and even during the day, what exactly they can do and execute. So thank you very much. And before I begin, I would just like to share that there might be few nifty views that might have been shared earlier with few of our clients. So to begin with, let's start with Nifty. I would just like to share my screen on Nifty. Well, before sharing on Nifty, I would just like to give a brief of what exactly today Nifty has done. We have seen Nifty moving up, being almost a percent up higher, or more than a percent, I would say. And there was certain news with regard to the oil and gas sector, with regard to the windfall tax, which led to Reliance, big movers like Reliance, ONGC, and all that were up by nearly 2 to 6% during the day. And similarly, there were some big boys, that is TCS, Infosys, HDFC Twins, which also pushed up Nifty higher. So it has been, we've seen a gap up, and now, right now, what we're seeing in the past few hours, that it has been consolidating marginally. There has been an improvement that Nifty's moved up higher, but at the same time, we see that it's consistent today, and there is not too much of volatility happening. So that's where Nifty is. Now I would just share my screen and talk about and discuss on the long-term trend of what Nifty has done. Yes. So post-COVID, we have seen Nifty moving from 7,000 levels to 18,600 levels. And we have not really seen any kind of a good correction in this entire move. And in fact, we crossed the previous highs of 12,000, 13,000, and moving up higher. So when we talk technically that the long-term trend of the Nifty has been up or bullish, the reason saying that a very basic theory, a Dow's theory, what we say that a higher top and a higher bottom formation always leads to an uptrend, whereas a lower top and a lower bottom formation of price always leads to a downtrend. So when I talk about Nifty of the long-term trend post-COVID, that it has been forming a higher top, a higher bottom. If you can see my the axis of the mouse, that I am marking it, that these are the higher tops and higher bottoms. So overall, when we talk about the trend of Nifty is up. Now there has been adding on to something more than a price is the moving average, which is very important. Moving average usually is something that tells us what the underlying trend of the Nifty is. So when we just talk about when somebody has to ask what is the trend of Nifty, so we would say that the trend of the Nifty is up. Having said that, we have you can see there are three moving averages of different colors drawn. So the green one is a 50-day moving average, which normally tells us the intermediate trend, a medium-term trend. 100 would be more on a longer time frame, and 200 is something a long-term trend in order to understand that for the year, what is the trend that we are looking at. So when the price or the Nifty, when we see it is above the 200-day moving average, it clearly says that the underlying trend of Nifty is bullish on a weekly chart. I'm saying weekly is because we are just trying to cover a longer time frame. A daily chart would just look a bit kind of clustered. Secondly, when moving on to a 100-day moving average, recently a low of near 15,100 levels, or we can say as a 15,000, which is like a psychological number, has acted as a very good support. And we have seen a bounce from there to nearly by 1,500 points. When I say that, there has been in the past history, which was 15,000, 15,100 was a remarkable number, which acted as a resistance some time back. And now, when we have seen a fall from 18,600 levels, it is acting as a support. Uh, I would like to show that, which will help in understanding exactly what is that area that I'm looking at. This. So, in the month of February last year, 2021, this level, that is of 15,400 to 15,500 levels, was a resistance. It made couple of attempts to break, which it did not. And finally, in the month of May 2021, we saw it taking it off. So that resistance level was broken off, and we saw another upside movement. Post that, when we have been seeing a correction, currently Nifty, recently, that is in the last month of June, we saw that Nifty has touched that same level, which acted previously as resistance, as now has been acting as a support. Coinciding with that is a 100-day moving average. A 100-day moving average, along with a previous historical crucial price, indicates that that's a very strong support level. So from there, we have seen nearly a 1,500 points movement. Now, I would just like to zoom it to understand and talk about what we are doing in the past couple of months. As I said, that the basic trend of Nifty on a longer term time frame is bullish. However, when we break it down to few months, that considering since last October or November, that we have seen that Nifty has been forming a lower top, lower bottom formation. That means on an intermediate or a medium term basis, we have been seeing a correction. Now, that correction is what was required, because so far we haven't seen a decent correction when we have moved from 7,000 to 18,000 levels. Currently, from 18,000 to 15,000 is just nearly 23.6% of the correction on a Fibonacci retracement level. Technically talking about it, a Fibonacci retracement, these numbers do make a lot of vital importance. When we talk about Fibonacci, they act as a very good support levels, because they might have acted the same before in the past history as well. So talking about of the past few months, Nifty has been doing more of a lower top, lower bottom formation. I would just like to mark it here, where my axis is, that from 18,000 we have seen of nearly like 16,400. It tried to move up higher, but it was a lower top, and again a lower bottom. That's again a lower top and a lower bottom. Currently, at these levels of 15,000, we have seen a base formation. However, we cannot confirm that in the medium term, the correction is yet over. The only point where we would be able to see that the change in the downtrend has been when it has to take off this previous top, recent top, that is of nearly 16,700 or 790 or 16,800 levels. So, having said that, now let me break it down further to a shorter time, short-term trend of Nifty. After forming a base or forming a bottom formation at 15,100 levels, we see that Nifty has been consistently showing an up move. It has retraced a little, and again we see a bounce and a buying coming in. Most of the large contributors have been the large cap stocks like Reliance, TCS, Infosys, all of them playing a role where they have been volatile, as well as they have been contributing to the Nifty performance as well. So when we talk about a 15,000 level, and from there we see a higher top, higher bottom formation for a shorter time frame. Today, what we have seen is a gap up, and that gap up is nearly towards the 100-day moving average. So when we talk about the moving averages, they act as a support as well as the resistance. So currently, these levels are very crucial to be watched. So when we talk about it, that this level of say 16,500 where currently it is, and if we have to look back at the previous price action at such levels of 16,500 to 16,600 levels, that there was a confusion, there was a resistance from where we saw a decent correction coming in. So at these levels, when we talk about 16,500 to 16,600, can be where we can see higher volatility, we can see a change in trend as well. So talking about from intermediate moving to a short term, that intermediate is seeing a correction. In short term, we are seeing some upside momentum coming in. And a level of 16,500 to 16,600 can act as a resistance, because there are two things, factors that we are looking at it. One is that in the past 1 month, that is in June, we saw resistance at the same level, and currently it coincides with the moving average of 100 DMA as well. So when we have to talk about it, that we saw a couple of gap ups recently. Today we have seen a gap up. Now, if we have to see in the coming days that Nifty is giving a weaker closing, it gives us an opportunity to short with a very shallow stop loss of considering today's high. The reason of saying that is that we are currently at a very crucial point, what I'm talking as resistance, and at the same time, since there is a gap up, Nifty usually has a lot of, quite often has been observed that it covers the gaps, it fills the gaps. So when I say that in the June 10th or rather 11th, we saw a gap down, and we have seen that gap being filled here. From there, it acted as a resistance where it filled the gap, and then again we saw some kind of a retracement coming in. Similarly, right now what we are seeing is a gap up, and there are high chances if Nifty gives a weaker closing, then we can see Nifty retracing towards 16,300 levels. Currently, we are at a psychological mark of 16,500 to 16,600 levels. Hence, it adds on more weightage that we can face resistance over here. This is on a very price, on a basis of price that is very basic. Now, if we have to add on to the indicator also, that is the RSI, the relative strength of the index. So it's a momentum indicator which tells us how much of strength that script or the index has compared to the past. So currently we are seeing that RSI has been near 65 levels. So above 70 would be an overbought zone. However, if we continue to see an upside momentum coming into Nifty, this index or this indicator would continue to remain in the overbought zone. But how much compared to the past is what matters to us, because we are looking at a relative strength of it and not an absolute basis. So if that relatively it is not forming or it is not going higher, would be an indication that Nifty is turning weaker, and probably we should look at some opportunities to reduce our positions or probably take a trade in it of shorting the Nifty. This is one way of looking at it. Considering the MACD indicator, it's a trend following indicator. It would follow the trend. So currently, if we see that it has been in absolute in a positive territory, which means that the trend of the Nifty is quite bullish. And in case there is any divergence of if or we see any kind of a reversal or turning point on MACD, would again be an indication to start considering shorting in Nifty. So this is how we have looked at the short-term trend. Now I would like to even bring it down to further on an intraday basis. Let me just show the intraday chart of it. So now this is the intraday chart of Nifty. That is a 15-minute chart time frame that I have taken. So before explaining what it has done today, I would like to share two kind of strategies that really can work in Nifty and on intraday basis. It could be a trade strategy for intraday. So let me mark some lines which would differentiate the different days. We are taking this as the 15th. Here we have one, and that is another one, that is the 19th. And we have one other one that is. So currently I have drawn these vertical lines. If you guys can see that these lines are just to differentiate the days. That is, this would be the 15th of July, then moving on to the 18th of July, or that 19th. And then we have today's intraday 15-minute chart. So let me share the first strategy on Nifty. That is, we look at the inside bar concept. Now, what I mean by the inside bar concept is that when the stock, or sorry, the Nifty is forming a 15-minute candle, the first 15-minute candle, and the crucial point is a formation of the second 15-minute candle. If the second 15-minute candle is within the first 15-minute candle's trading range, then that's a first setup being ready. That would determine the direction of Nifty for the day. When I have said that, let me show you all how it has really worked. Um, yeah. That is on the 15th. 15th of July, if we see that this is the first 15-minute candle which has been formed, and the red one is the second one. Now the second one, the 15-minute closing has been within the first 15-minute candle trading range, which is a first setup being defined. Now we have to wait that in case if the Nifty has to move above, or it has to take off the first 15-minute candle on the higher side, our trend for the day will be determined as an uptrend. Similarly, the same thing on the bearish side, that if it has to break down from the first 15-minute candle, make a lower low for the day, then our trend for the day would be determined as a downtrend. So on the 15th, it's very clearly we can see that considering and it would be nearly 30 to 40 points on Nifty that can be made on intraday basis, following this strategy, that if we have to consider looking at taking a shorter position, because we have seen a breakdown easily over here, it went up higher, and a stop loss can be maintained at the first candlestick high, and we can go on with our trade. So we can see that it made a low here, and from there we continue to maintain our stop loss. So for that day, we have seen that our stop loss would have triggered at the end of the day, or we would have not got triggered and squared off by nearly 3 o'clock, because the Nifty move above for the day's high, it made only after 3 o'clock. So usually we would be squaring off our positions at that point of time. This is one kind of a strategy that we look at. That would be a second strategy that we look at, is in case our first setup has not been formed and we see the Nifty formation where it has been moving in one direction itself. So our first 15-minute candle and the second 15-minute candle are in the same direction, and it does not form like an inside bar, or it does not show any kind of a consolidation in the first half an hour, then this is the second setup what we have, that is yesterday it had done. So here is the first candle, which we have a white bullish candle, and the second candle is almost at the high of it, breaking the first candle's trading range, which indicates that it is in a very strong momentum. When we say that, we really cannot take a position over there, because it's already in the momentum of moving up higher and entering into a trade above the second candle's high, or even the first candle's high, will add on to more of risk and lesser of a reward. So we have to take a contra position over there, wait for Nifty to reach to its extreme point, making high. So we can see here that by around 11 o'clock or so, it was consistently moving up higher. And then by around 11:15, it started moving down. When we say that, we have to wait for a position that it would retest the previous highs, and that's where you would be taking a position over there, or we have to wait for a closing to take place. Here we have seen that it was trying to test those highs consistently, but it never give a shorting opportunity. We can wait for a shorting opportunity only when we have the closing prices or we have a moving average cross down. Here I have highlighted that the 8 EMA and the 13 EMA. So a crossover and a cross down of these moving averages help and confirm in to take a position that is on the buy side or for a shorting opportunity. So when we say that, currently we can see that the 8-day moving average is comfortably higher, moving above the 13-day moving average, exponential moving average. And this would be just near that level, which means that there is absolutely consolidation. There is no trade setup or the trend being determined. So it would be difficult to take a position here. However, if we see a cross down of the 8-day EMA crossing down the 13-day EMA, it would give us a chance to short a position, keeping the stop loss of this high as a stop loss. The high would be at 16,300 levels as a stop loss, and we could have shorted the Nifty considering nearly 40 to 50 points of gains. However, this opportunity we could not see it. Today, what we are seeing here of today's setup, we can say that Nifty has been in the consolidation range in the first half. We saw it moving up higher. However, we have not really got a convincing close above those levels of the trading range. That is a 15-minute range. So we would not be able to take a position there. However, a strong closing that is above these levels would have helped us to take a new entry, a position of a buy, and with a stop loss of this first 15-minute candle, that is of 16,500 levels. That would be the stop loss, and we could have taken a position. However, it has not given us a strong closing above these levels. Hence, we would not be able to take a trade in this. Right now, what we see that it has already taken on a 15 minutes, that's 1 o'clock, we saw a fall coming in, and it is within the first 15-minute trading range. So for today, it would not be, it wouldn't be advisable to take this kind of a trade here because we don't have a setup. We don't have a setup either. On the contrary side, we would be shorting it, or we don't have a first strategy setup where we are looking at a breakout from a 215-minute candle. That is one. Now, secondly, if we have to add on one more indicator of the RSI, RSI is clearly telling us that currently it is the strength is weak. It is not very consistent. Hence, that would add on to our more conviction that it is advisable to avoid an intraday trade today because it is not giving us an opportunity. The risk reward is not favorable over here, and it would probably we would end up with no gain, no loss. No gain is because there is hardly any upside that we are getting, and no loss is because our entry point is within the consolidation range, which would not really help us in making or incur a heavy loss as well. So when I'm talking about RSI, it has been forming a lower top formation for the day, whereas if you see Nifty has been marginally moving up higher. 1 o'clock, we've seen it coming down, which the RSI has also. However, at the same time, if you see that relative strength of Nifty is weak for the day, which indicates that a buy setup is not possible here, as well as shorting wouldn't be advisable because we don't have a proper level to short Nifty. So this is what we have on Nifty. So on an intraday basis, I am covering nearly three strategies. That is on the, oh, sorry, I would just be going through your questions in a moment. In intraday, we have been going through two strategies. One is the inside bar strategy, where we look at the first 15-minute candle formation, and the second within the first 15-minute candle trading range would determine the trend, the breakdown or a breakout from that trading range. And the second strategy is a bit on the contrary side, where the Nifty has been headed in one direction only, which is like an extreme trend for the day, and we wait for it to move in a contrary direction. So these are the two strategies which really work along. And when you compile the moving averages of 8 and 13, where we have a crossover or a cross down, will definitely add on to more of an accurate results. So moving on, there is already a question here. What are the where are the markets headed in the near term? What do the technical charts suggest? So, as I had made a mention that in the short term, we have already seen the Nifty moving 1500 points, that is from 15,100 levels to 16,550 to 15,600 levels. Now, these extreme, it's already moved in the short term. So, I do expect from here that one should be looking at reducing their positions because we are almost at a resistance point, and wait for the gaps to be filled, as I can I'm highlighting it here that 16,340 or 16,300 levels would act as a support. So on a very short term trading basis, it's better to book profits, reduce positions, maintain trailing stop losses, wait for the Nifty to retrace a little, cover the gaps, and there could be a formation of a bullish pattern on candlestick charts, along with the indicators being very much in sync, would confirm that a new entry in the stock can be considered, or a buying in Nifty can be considered. So this is where I would see. Are there any more questions on Nifty views? Okay. What is your call on Pidilite and Asian Paints? So, okay, I would just be not giving the accurate targets for it, but I can give you an overview on these two stocks. So let me just share the chart of Pidilite. So when we talk about Pidilite, so Pidilite has been consistently in a very long-term trend. It has been forming higher tops and higher bottoms. However, it's the same thing as we have seen in Nifty, that this year it has been in a correction phase for the near intermediate basis. That is, I would talk about nearly for say 3 to 6 months, that it has been forming a lower top and a lower bottom formation. Currently, what Pidilite has been doing, it is nearly reaching its a very important 50-day moving average that could act as a resistance. We have seen it moving from 2000 to 2300 levels. That is almost, or that is more than 10% of the gains in the near term. So from here on also, I do expect a consolidation taking place, because we've seen an uptrend. Intermediate basis, we've seen a correction coming in. Currently, in the near term, it has to form a base to start having its bullish uptrend again. So I do expect it to consolidate in this 10% range for few days and then start moving up once we have a weekly closing above a 50-day moving average. That's on Pidilite. And on Asian Paints, um, that's very highly correlated to crude oil as a raw material. So in Asian Paints, if I have to see, lately Asian Paints has been very volatile compared to other stocks. So when I'm talking about it, in a month of Jan, it made a high, all-time high, and now we've seen a correction coming in. However, on a technical basis, I would say that it has been acting very strong comparatively, because it's almost formed like a double bottom. It's tested those lows twice before resuming. So when it's formed or tested the bottom twice, that means that from down, it is already into a consolidation phase. Though the consolidation phase, the range is very high, that would be nearly from 2,600 to 3,100 to 200 levels. But at least the negativity is less, or the bearishness is less, as compared to other stocks, which would be making lower bottoms. Over here, there could be a resistance that I expect near 3,100 to 3,200 levels. And from there, a very crucial range, again, the orange line, which is a 100-day moving average on a weekly chart, will act as a very important support. These levels, if remain intact, we would be able to say that yes, the stock is back again from consolidation to bullish. We wouldn't say a reversal because it's not from down to up, but we've seen the trend that it was in an uptrend. Currently, it has changed its trend into a consolidation, and from consolidation, if it has to take the levels convincingly on a weekly close basis of 3,100 levels, we would see that the trend of the stock has been resumed back again to up. Tanya, your thoughts on IT and FMCG? So on on IT, I would say that we have witnessed a very decent correction since October, almost nearly 30 odd percent of correction, along with the stocks also correcting in an equal manner, be it Infosys, TCS, Wipro, HCL Tech, Tech Mahindra. All these stocks have also identically followed the Nifty IT index. So talking about IT now, let me just open the chart on the Nifty IT, which will be easier. Here, let me add an interesting part of a very technical pattern which gave us to reduce our positions much at an early stage. That's one of the pattern of a head and shoulder, where you have this acts like a shoulder. This would be your head, and again a shoulder. It's a technical pattern, which is a bearish reversal pattern of the trend. So we have seen Nifty moving up higher, and this year, that is in the month of Jan, we have seen it forming lower top, lower bottom formation. It broke down from this technical pattern and almost gave us a target near 26,000. Ideally, it's near 25,700 levels. Currently, we have seen it testing the same bottom again. So when we just spoke about Asian Paints. The similar thing is happening here as well. This is a weekly chart that it has been testing the lows again and consolidating in a range of 26,000 to 28,000. Let me highlight it here. Here. You can see that it has been in a range right now, and currently it is near the upper side of the range, that is 28,400 or 28,500 levels. So a close above that would be a breakout technically, which would add further bullish momentum in IT, or till then we would continue witnessing some more consolidation. Having said that, when we add the RSI as an indicator, if we look at it, RSI has kind of shown us little bit of positive divergence. It's not very convincing. We require to wait for more confirmation. But if we see that when Nifty IT was making a lower bottom at this point of time, we almost had RSI at the same level at the same lows. And currently, when we saw the same level being tested last week, RSI has has marginally shown a higher bottom, which indicates there's a marginal positive divergence. However, it is better to wait for more confirmation, that is a breakout from this consolidation range, which will add on more 2000 points on the index. And you can take a call stock specifically wise, because Nifty IT, the formation is, we will see the same formation in Infosys, TCS, Wipro, Tech Mahindra, HCL Tech. All five have a very similar formation of what Nifty IT is. So considering a broader, a sectoral view, you will be able to take trade calls on these stock specifics as well. FMCG is a bit tricky. We have lately seen very volatile moves in FMCG, and considering that, if you see that in October last year, it's almost reaching its highs back again there. So over here also was a very interesting pattern which gave us to take a position probably a month back. That would be this, where I'm highlighting my horizontal line. It's a weekly chart, so it will give you a broader perspective of more than a month. You will be able to give, it will give you a clear picture of what exactly the trend is. And if we can later on discuss on how we can work it on the shorter time frame. So considering FMCG in October made a high, we saw a big fall coming in there, and since then it was moving in a downtrend till uh, you can say end of Feb or beginning of March. Right now we can say that it was kind of forming and facing resistance near 14,250 levels. It tested couple of times, that we can see April 18th week, then we have the 25th next week, then the following week on the 2nd of May, and even end of May. There were a couple of times that the FMCG index was facing a lot of resistance near 14,300 levels. However, in the beginning of July, that is the first week of July, we saw it breaking down from the resistance, which was a clear buy signal. Now, if we have to add on to the RSI also, let me add a trend line here, a horizontal trend line. You can see that RSI has also confirmed. Initially, there was a positive divergence where RSI confirmed the breakout before the price index could, which told us that the moment the price can take off, we can consider getting into it, buying stocks into it, because RSI has also confirmed. And we have a moving averages like 50 as well as 200-day or even 100-day moving average on a weekly chart, comfortably moving below the price, which indicates that the underlying trend on a longer time frame is bullish. Now, let me break it down to even a daily chart. A daily chart also would signal the same, and currently it is already into the momentum. So, a level to watch is here the previous highs of 15,300 levels, where it can face resistance. One should consider reducing their positions, booking profits, and continue to maintain a stop loss, because we are reaching a point of a resistance. So when we have to collaborate two things, that is a Nifty as well as the Nifty FMCG, are doing the same thing, that is moving towards the resistance point. As far as the indicators are not confirming, one can continue to hold on and partially book profits as well. A moment there is a reversal, your trailing stop loss gets triggered, and at least you have booked your profits much in advance before you lose that opportunity. So that's where the new view on FMCG is, that it's approaching the resistance level. Continue to hold on to it, and at the same time, near the resistance level, the moment it moves near 15,300 to 400 levels, start reducing the positions. At the same time, I'm not saying to exit it, but a trailing stop loss is always advisable. There are some more questions coming in. That is, what is your view on Apollo Hospitals and Nosil? ITC is also on a roll. Your technical view. Let me just, since we are doing FMCG, I would just share a very a quick view on ITC. I totally agree that ITC has been on a roll and it has surprised everybody, because the kind of returns were not really expected when it was moving at 200 levels. It gave a breakout from around 200. It was moving in a range of 200 to 220. From the 220, the range moved to 220 to 240. And from 240, we have seen that it has just been on a roll and it has a lot of momentum. And even right now, the momentum is higher. At the same time, if you see that the volumes are not saying that, volumes are comparatively less. When the stock moved from 200 to 220 or 240 levels, there was an accumulation, there was fresh buying happening. Currently there is less of buying. If ITC has to take off these levels and it continues to move up higher but with a lesser volume, indicates that this could be where people would look at booking profits. However, having said that, RSI is yet towards the overbought zone. So these levels can be considered to continue holding on to your position. At the same time, if you have a position, I would suggest reducing it by 20% at every notch higher. So if at these levels or at 300 levels, you would consider to reduce by 25% of your position and maintain a trailing stop loss for the balance 75%, and so on. Keep reducing your positions like that, because right now there are no volumes. If there were volumes, I would have continued to uh, uh, suggest that or advise that yes, you can continue holding on to the position, but there is a bit of a divergence when the volumes are concerned, and volumes do play a very vital role with the price movement. Hence, I do consider that. So that is my advice on ITC. These would be, I think, the last few questions. That is on a view on Apollo Hospital and NOSIL. So first, considering Apollo Hospitals, uh, let me just get a broader perspective that Apollo Hospitals has uh, technically broken down when it broke down from 4,200 levels. And if you see the correction since last year, November or October, that is a high of 5,900 to 4,000. It was in that range. 4,200 was a very important support level, which it breached, broke down in April or May this year. And currently, we are just seeing that it is moving and it would be testing those levels. So the support levels have now become a resistance level. So I would be a bit bearish on Apollo Hospitals over here. It's like a contra trade setup over here, that if you see it moving towards 4,200 or 300 levels, is where it would give you an opportunity to short the stock. I wouldn't say I would bullish on it. The couple of reasons to it is also that when I said that it's volume plays a very important role. When we are seeing a price rise, I really don't see the volumes coming in. So it's not too much of volume. Volume increase along with the price rise would have been a perfect scenario to get into the stock. However, when we see this kind of a setup, wait for an opportunity where you can reduce your position, or you can, if you don't hold it and if you're looking at a trade setup, then at around 4,300 levels would be a shorting opportunity. Of course, it's not blindly to be shorted. We are seeing these levels, that is a 50-day moving average, a candlestick reversal pattern, whereas even RSI is currently not indicating any positive divergence. It's more on the negative front. It would be simultaneously facing resistance on RSI as well. Once the RSI is reversing, would be confirming a shorting opportunity. So that's for Apollo. I don't see overall, I don't see further upside. 4,300 is what I see a resistance there, and which would be more of a shorting opportunity. And now we have NOSA. That would be the last and the final one. Nozzle has, that's again a weekly chart. Nozzle has been doing well. It's performing almost in sync with Nifty. And there is a technical pattern over here, which I call it as an inverted head and shoulder. Now, inverted head and shoulder is a reverse, a mirror image of what I explained few minutes back about a head and shoulder. So head and shoulder is a bearish reversal pattern, whereas an inverted head and shoulder would be a bullish reversal pattern. So we have seen nozzle that it has touched these levels of around 260 couple of times when it was forming like a shoulder, or it was in this formation of an inverted head and shoulder. Again, couple of weeks, it tested the same levels of 260, 265. And finally, last week, we have seen a bullish breakout from this pattern. So when there is a bullish breakout already, and at this point of time, I wouldn't be advising to just buy, wait for the stock to come and test the support levels, that is of 262, 265 levels, which will give you a buying opportunity to enter into the stock. Currently, who do have the stock can continue holding on to the stock, and people who would like to get into this stock of Nozzle can wait and definitely enter into the around 260 to 265 levels, because the trend of the stock is reversing from side to up. We can see that it's already started forming higher tops, higher bottom formation. So that's my view on nozzle. And I think we have covered most of the questions in, and we are almost out of time now. So I would just like to thank everyone for being there, and hope my views and Nifty and different kind of stocks queries have been helpful. In case there are any further questions, I would like to request you to drop in a mail where I will be able to share my views as well. My email ID, I'm just sharing my screen for my email IDs, and this is it. In case there are any further questions, please drop in on my mailbox and I will be able to revert on that. Hope this session or this webinar was helpful, and hope to see you guys more often, and we'll be happy to share and talk about on technicals. Thank you so much.